We're breaking down the market's wild ride from the brink of a correction to brand new record highs.
So how did the market pull off this U-turn? I mean, just weeks ago, the outlook looks pretty grim.
Okay, so back in late March, some analysts were saying, hey, there might be an opportunity here.
They were watching 4 key red lines, basically major warning signs that things were getting serious.
And yep, by early April, we blew past all of them, with oil surging over $117 a barrel.
The big reason for all this? A crisis with Iran that had the entire world on edge.
And then, everything pivoted. Fast. We went from threats of war to a sudden ceasefire announcement.
That one headline was all it took. The market saw it as the beginning of the end.
And just look at this reversal. It was a complete 180 across the board, and it happened fast.
The S&P 500, it shot up an incredible 13% from that low point in March.
Get this, it all happened in just 13 trading days. That's what analysts called a good monster rally.
Why a good monster? Because its speed created insane FOMO, forcing sidelined investors back in.
But here's the thing, it wasn't just the ceasefire. That was more like the spark.
With that geopolitical risk fading, the market could finally focus on its real, underlying strengths.
And crucially, the outlook for company profits? It just kept getting better, right through the crisis.
So we dodged that bullet. But could a different kind of monster be lurking out there?
And that risk really seems to be the consumer. Corporate profits look good, but what about people's wallets? Because if people stop spending, that awesome earnings growth we're counting on, well, it could just vanish.
So that's the big question now. Does this good monster keep running, or is a bad one waiting for us?